Jeff.
Okay, yeah, you can just wipe this up. Well, good morning. On behalf of the RDIEC, my name is Jeff Cameron, and it's my absolute pleasure to welcome Leanne Dubuc. Leanne is with us today to tell her story. I guess in short, we can say it's kind of about money, all about money. I'm not too sure, but mutual funds. And this is something I wish I knew a little bit more about when I was younger. Anyhow, Leanne, I'll let you take her away, and thanks so much for joining us here today.
Yeah, thanks, Jeff. First of all, I'd like to thank you for asking me to speak on this subject. Finance and stuff is always a touchy subject when you're starting off in life. Nobody wants to talk about finance and where they are. Seems like a great opportunity. It's a great program, and they're certainly lucky to have Jeff as a great advocate for this program. It's a valuable resource. I know back in my day, it was you had to go to the universities to figure out what career path you want to go in. And with the tech industry, you can just reach so many students this way. So it's a definitely great program to be involved in. Thank you for the invite. Like Jeff said, I'm Leanne Dubuc, and I work in Oxbow as a financial advisor. I'm licensed to sell mutual funds, exempt market products, and life insurance. And I can explain each of those in a little later on in the video. And a little history about me is I've been in the business side for right out of high school, I guess. I started off in a retail and become a manager, and then various financial positions throughout my career. And I worked at the credit union, local credit union in the area for a few years, and ended up going towards more of the accounting side and tax preparation and bookkeeping for about 15-20 years. And I was approached by Mel here, he owns the business Flair Financial, and he asked if I would be interested in getting my mutual funds license and working with them. So after much consideration, I took a leap of faith and decided it'd be a good change. Just a little different end of the financial part compared to the tax preparation and accounting. And so not much change in my background in finance, but always is a change throughout your career. Don't ever be scared to change. It's usually good, but it can be difficult. And yeah, so we decided together that I would start taking my courses to get licensed. And we both have our mutual fund license with like exempt product license and our life insurance. Took about me 3 years to obtain while I try to balance full-time job and family with that. It could be done, of course, in a little bit less time if you were just starting out in the industry as a single student coming into the industry and looking to where you want to go. So just basically, the financial advisor is someone that helps navigate through your financial decisions to build and maintain your financial goals or your portfolio and achieve your life goals. Everyone certainly is different in goals in life, and hopefully a financial advisor could just steer you in the right direction with each client. And everybody is so different. So yeah, it's like getting advice. As you decide on your career path, essentially you're investing in yourself. You hope to build on that career and make money. So investing in a mutual fund is basically the same thing as buying stocks or shares to build your wealth. So you want to really make money with your money. And investing in yourself is the key. And starting off early is another key factor. So we help navigate through finance through life insurance and try to be tax efficient along the way as you grow. So just a brief description on what mutual fund is. There's many ways to invest your money, and there's lots available at your fingertips, and especially in the markets today and online. And there's so many apps and Q-Trade accounts, and the banks are starting to put more hands on to each individual to do make their own decisions. So this is definitely a developing industry. And so a mutual fund, basically, it's a pool of money, and it's managed by a professional portfolio person. And the fund company takes your money and invests it into companies and commodities. And mutual funds are very affordable. Like, doesn't take a lot of money to get into the markets, get your money into the markets. Very accessible, and essentially you're buying shares or stocks in companies that perform well, and like such as Microsoft, Google, Tesla, Amazon, even the AI is becoming prevalent. So they pool all your money and they manage it, and they watch, this professional manager watches the stock markets around the world. And it's just it's an easy tool to start to make your money grow. There's definitely different tax preferences in mutual funds, and allows you to be tax efficient, and that's just totally different. It's part of the financial advisor's role, but you can totally do a certain topic just on the tax side of investing. And then as for the advisor, we watch and keep track of companies, fund companies that hold these investments of yours. And we kind of watch and decide on which companies perform well, which ones have the good managers that understand the markets, when they go up, when they go down, when do they need to move your money into more of a stable cash value, fixed income, so you don't dip too low or into the markets. So we help our clients based on your risk profile. Now, everybody's different. Everybody takes different kinds of risk levels. Like if you're a daredevil jumping off of a cliff is exciting to you, chances are you're going to take a higher risk even with your money. But if you like to stay stable and like to keep your principal and let it grow, then we'll put your money into something that's more appropriate to the client itself. If you're conservative and you want your initial investment to stay stable, less volatile, your money is going to grow a little slower, but it'll definitely be steadier. So if your mutual fund it's got to be diversified, and you can see the ups and downs of tech companies go up and down, and healthcare and commodities such as oil, farming. They all play a role in how the market plays out throughout your investing. Right now, like AI is big. It's very growing interest, developing quite quickly. And a lot of the tech side of funds that you hold, they're growing because of the tech, not so much on bonds and such to keep your money stable. The tech side is growing. So it's a good indicator on how the markets are growing right now. And I don't know if most students are aware, but the economy did drop because of COVID, and it just seemed to snowball and went quite low. And your portfolio, your money looked like you were losing money, but eventually it comes back up. You just have to wait it out. So the mutual funds will put your money in certain different asset allocations, they call it. So the fund manager or the fund itself will put your money in different countries. Foreign countries like US is such a strong economy, even though they are in debt just like Canada, they still have growth. They put their money in like mid cap companies and large cap growth companies, and they watch for any up and coming new companies that would stem a growth period. And that's where you would see your investments rise a little bit and improve. So there's always the side of how much do you know of your knowledge of finance. And a lot of people, as students, they come out knowing not a lot. They just think you just got to save money. But there's always a value in advice. And we guide each client as an advisor with the ups and downs of the markets. We try to make sure they're don't worry too much, because the markets do go up and down, and you just got to be aware of what, you know, in the long term is what you're going to achieve here with a mutual fund. So a lot of the clients are like not knowledgeable. So as an advisor, we're there to teach them how the role of the markets and what a mutual fund is. And somewhat are like 36% is somewhat knowledgeable. So they know, they can go to the bank and then get interest bearing rates and perform that way. So very little, like 3% is very knowledgeable. So we have clients that are like, watch the markets and call and check and get our opinion, but they do their own investing, say they have their own opinion, and that's fine. Like we guide as much as various types of people along the way. So we also heard many lately, the inflation is a big role, especially in Canada. The cost of buying something is very high right now, so it is a concern for people investing. So they want to know, you know, are they going to have enough to retire with the funds that they have invested? So definitely advisor role is to work with you and help you guide yourself and try to stay stable and focused into what you're trying to achieve. Also, government decisions have a very impact on the dollar and cost of goods. Some of that basically is out of your control. So we help clients navigate through these market fluctuations, and the value of time is the key. So start early. So the impact of time, the market emotions to work with you to get through the ups and downs, not just the market, but even your personal life. There's going to be ups and downs, and, you know, start a business, get it going, and it doesn't take off. And then you got to readjust and always improve. And then, of course, the market volatility can work for you. When the markets go down, when they level off, that's always a great time to put money into the market. Buy your shares, buy your stocks, because it's going to grow that much quickly. If you put in $1,000 at the low time, it grows like 5% in like months. So, and not just years. So you got to watch the markets and ask for help on the way, or, you know, check in once in a while and see where your stuff is, where your RSPs and TFSAs and stuff, that where they're sitting at to ultimately reach your long-term goal. So you can notice that in this big picture, the value advice, it started off in the graph shows in 1939 or 34 it starts. and you'll see the big, it's constantly rising. There's going to be dips, and a lot of the dips are like the Wall Street dip, and then the 9/11 dip. You can see that in the timeline, and eventually in the COVID, and like the 2008 US economy crashed. You'll see that dip. So the longer you have your money invested, the long term, it's going to come up, just a matter of time, right? So it's always worrisome, but you have time on your side when you start young. I wish I would have, had this little talk with an advisor, when I was, 18, just out of high school. So it's always good to start with someone, and your parents is a good start. You also need to find someone else that can guide you, because not everybody knows that industry. Not everybody's a farmer, not everybody is a doctor. So, if depending on what you want, you gotta pick the people beside you to help you along your life goals, and encourage you to keep going, sort of type thing. So we try to focus on clients and their portfolio and their financial assessments, and set targets for our clients. Some of them are like your major life decisions, paying off student loans, buying a car. These are all big ticket items for you, and you always really need to know in the background where your finances are, where they're going, and like saving for a house. Can you afford a house? Can you, or what would be the best scenario? Should I buy a car? Should I pay off the student loans? There's all these questions that you have as you go, that you could always use a second opinion. So you should always be involved with any life scenario with an advisor. Also, insurance plays an important role. You have insurance for your car, so you should have insurance on yourself. There is definitely created a certain stigma against life insurance. It's not like that. It's just a platform to help secure your life goals, basically. It's to protect your investment and you as yourself in your career. Your ability to earn income is your greatest asset. You want to protect that with some kind of insurance: critical illness, term insurance, long-term disability. It's basically a safety net for your future, and it cannot cover any risks that may help throughout your life. As from my personal experience, we were lucky to have some kind of insurance. We had a little bit of an illness in the family, got through it, and so you just never know. You think you're going to be, when you're young, you think you're going to be healthy forever, but you just never know these days. Together, you and your advisor should cover many topics, including the amount of money you should save, the types of accounts you need it in, and the types of insurance you should have: long-term care, term life, disability, and then also estate and tax planning. These are all things an advisor should help you navigate, and always be in favor of the client. We always have to make sure that your client's needs and wants are at most the most important part of the job. Not everybody will accept our recommendations as an advisor, and I just feel that's our responsibility to inform the our clients, with tools and resources to become a financial savvy and knowledgeable. There needs to be a trust between clients and advisors, knowing that you provided the tools and to encourage and make independent, wise decision. is basically what the advisor's job and role and their goal is to help you succeed. So some of the products and stuff that we sell here is varies, and we have we have a lot of products available to customize to each client what they need. So we also can put together a forecast of certain growth in your financial investments. And depending on various things, we like to see you meet those goals. So we create budgets and we advise on certain aspects of the big picture, not just one or two things, and savings accounts and stuff like that. What's more beneficial for the client? Creating a nest egg for you and the family as you grow. And then once again, like as selling insurance, I like to mention that again, that there's financial safety and a peace of mind. And then you also secure your future. You can leave legacies. You know, if you've done well in your career, you can always leave a legacy through insurance. It's definitely a tool that I wasn't aware of until I started taking the course, how much it could impact your finances. So that's another part of the financial advisor, the variety of tools they have at their hands to help you. So as for picking scenarios for each client, we really want to drill down and figure out what the client's needs and wants are. We try to challenge them in getting our questions answered to find out what their real goal is in life. And lots of people at a young age, they don't really have, some have definitely written down goals, but some are they just don't know. So we would like to help each individual, you know, no matter what age, achieve those goals. And it's never too late to start saving. Life gets in the way, and bills come in, and you just seem like it's snowball effect. But it's never too late. We see it in the markets today. Putting in $10,000 and it's already up 500. So the markets definitely play a good part of the role, but essentially figuring out with one-on-one with each client is the key to a financial advisor. It's not necessarily does the client need to know the actual finance part. You don't really, you just have to guide them into making great decisions. And I think it'll work all in their favor in the end. So the trust, I like to bring that up again, is you need a trust base on each client. They come to you for advice, and they just want to make sure that you are focused on them. You can have many clients. When they call, you have to bring it to their attention. You have to give them your time. That's a big part of the financial advisor role, is sitting down with them and making the time to go through their portfolio and making sure their goals are being met. It's definitely a math. You need to know your math, but it's a lot of more getting to know your client and being comfortable with people skills. You really need to kind of tone or focus in on how to read people. If they're really not interested into what you have to say, you have to break that barrier to get them to open up to you. So the people skills of the job is very demanding to get clients. They're there. You just have to be approachable and think that this is a career that you like. You have to have people skills is the utmost important. And you if you have your business sense, you like business, that would be a different career to go into, is get your business and get that behind your under your belt, so to say, and focus on that. I myself have been in the public eye most of my careers, and I think I like the most best part of the job is the one-on-one. It certainly is more my the way I like to work with clients, to have a big group in front of me and working with many people at the same time. I prefer the one-on-one. So it's that part of the financial advisor is very important in deciding a career. If you like the one-on-one objective, and or if you just want to stay with the business side, there's definitely many out there. Together, you just decide, as you go through life, what career you want to go, and it will steer you in the direction, all your decisions that you make. So I'm hoping that the financial part doesn't scare off any potential career making decisions. It's definitely one aspect, but it's a lot of the more client based part of the career. So through all of this, the one question that maybe the students will be asking is, how does the financial advisor make their money? Basically, they earn it by commission. As people invest in the mutual funds, it's built right in as a fee. So they do charge your fund as it grows, a fee. So it comes off basically the return of your investment. So if your investment makes 8%, then you actually maybe make like 7, and then the 1% goes towards the cost of managing the fund company, and it trickles down to the advisors. And insurance is the same way. You sell insurance and you can make commissions up front, and you can make a modest wage, but there's potential there to have a very lucrative career in it. So it's always weighing one or the other. It's basically, it's up to you as an individual and how aggressive you are or not aggressive, is where you're comfortable at sitting for making your commissions. The best way to promote yourself in this industry is by word of mouth. Discussing finances is difficult, so you have to really challenge yourself personally to see where you are and how you talk with people. So it's the biggest role of financial advisor is getting that into your persona. And it's not easy. If it was easy, I think everybody would do it. So you just have to figure it out, and you'll always ask questions, always improve, read. That's definitely the best thing for you. Is there's so much at your fingertips with the internet. It's just unbelievable what is out there to help you achieve your career path and I'm hoping that financial advisor is, it's not scary. It's definitely challenging. So if you like that, that would be a good role to begin with, or, think of going this way. So just a few targets, goals and targets as your portfolio grows. You got to take the overall picture and work it down to where you want to be in life. You're starting off small in your career and you got to build it. So that's about all I have to say about the financial advisor's role. So Jeff, if you have any questions for me, fire away.
Well, thank you so much, Leanne. That was a wonderful presentation. I think twofold, question-wise. I think number one, the students that are watching this will have a pretty good idea of time and where they need to be and starting early. So that will give anyone a huge advantage over what I know you'd said you wish you'd have known when you were younger. And I
Right.
sure would. I'd have known that the growth that money can do. And also for the career side. So when a student does graduate, and if the student is interested in something like this, what is the pathway that they have to take?
Well, if the student wants to start off right at like high school level and get into the financial aspect, definitely start with business. Like that's definitely a big role. It definitely helped me doing the business side, like the bookkeeping, the accounting, the tax prep aspect. So you can, like I said, like I had 15, 20 years of working in the business aspect of certain companies and with companies. Always take your courses. It's a course you can take online to get you licensed. But I like the business side. It was easy for me because I had my business sense and I had worked with accounting and tax prep. So I had the knowledge, I had the base. You need to know the difference between an RRSP and a TFSA and how that is taxed. And you need to know CPP and old age security. You need to know those rules. So definitely go into business. There's so much available out there. But even a business administrator, it teaches you so much. I would, life teaches you more than sometimes than sitting in a classroom. So, but
Absolutely.
yeah. So if you, start off somewhere in the business, and if you think you're a people person, yeah, definitely look into taking the online course. It's a self-regulated course. You do work at the pace of you. And like I said, it took me 3 years, but anybody that doesn't have kids and family and definitely can do it in like 1 or 2.
Right.
Right. And it's an industry where it used to be you get your life insurance license and you go out and sell life insurance, or you but it's harder now to make money doing that. So when Mel approached me, he already had his clients base. So we're just essentially rolling myself into his business already of established clients. So it's going to take a long process for get those clients to trust me and work with me when they're used to working with Mel. So there's that aspect where you get your license and you can buy a book of business. It's got its ups and downs, and then or you can just start at your get out on the street and start promoting yourself and build your own business. If you've got a good business sense in decision making and going from there, it's a good start. do the online. It doesn't cost a lot. You know, you can, it's very, you know, cheap to get into. You can do it at home, so you save all that kind of money that way. It's definitely, but it's like I said, you need to know your people skills to
Right.
get into it. Yeah.
And on a daily basis, what would you tell the kids then, like for some highlights, maybe some lows, like trials, but highlights and trials that you would maybe go through on a weekly, monthly basis?
Yeah, well, finance is hard, because you got the, as long as the clients are happy, everybody's happy. So, but you know, with the markets going down, you're gonna get those clients that are, you know, like just not happy with what's going on, and some of it is not in your, you know, it's under your control. So, you know, like we have clients pop in, they want to see their portfolio and see how well it's doing or not doing, and some are quite content and happy, and you just gotta, and every day is a different day. You gotta, you know, watch, be prepared to when clients do phone and ask them what they're doing or how they're doing. You gotta kind of be prepared. So you have to, in a regular day, kind of watch what your portfolio is doing and see, you know, and there's always opportunity to do improvement on their portfolio. We switched out one fund for a client, and it saved them, just by switching the fund, it saved them tax at the end of the year, because we sold it when they would take a loss. So it actually saved money. So you
Right.
got to be like on your toes, basically, and every day you start off the day with checking your portfolio, checking the clients' reports, and going with that, and you know, calling them up and say, here, I think there's an opportunity that we can take advantage of. You have to be on that, on top of that.
Right. So I know kids are always looking at what are they going to make in terms of a wage, and I know it varies, but it can you give them kind of a like a scale? Can they make a nice living at something like this if they decide to enter
Yeah,
the
like,
investment world?
yeah, like it's definitely, it can be very lucrative. You know, you can, it depends on how hard you work, I guess. Getting
Yeah.
clients out there, and you know, even if you start off slow, like slow, and get one or two clients, you got to build their trust. Eventually those clients are going to be, you know, I think their goal, your goal is to make them money, and they want to make money, so they're they're starting off like buying a business. So eventually you want to work them through, and let them, get them to be high net worth clients, and then that's when you really do make your money. Get, you know, like you just get high net worth clients. Some, today's client that has $1,000 to give you invested in a TFSA could become, in, you know, 30 some years, your high net worth client, you know, depending on what their goal, career goal is, right?
Hmm. Well, I think that last quote pretty much says it all. It's all about time, and again, this is you've done such a wonderful job of explaining the investment world, and also as a investment for students when they're graduating and or getting into this career. So, Leanne, I'd just like to thank you for taking your time and
Yeah, you're
sharing
welcome.
sharing your story with the students today, and volunteering to do this. It's very much appreciated.
Well, thanks for the opportunity.
Yes, thank you. Take care.
Thanks, Jeff.
Yeah, bye.
Bye.